Hey y'all, Bill Duran with Diamond Guard Insurance here in the great state of Texas. We're getting to that time of year where a lot of people are going to be buying homes, moving, a lot of first-time home buyers. So I wanted to do a quick talk about how deductibles actually work. I think of a deductible as the skin in the game. Okay, when my daughter went away to college, I paid for a good chunk of it, but I made her take out a loan. $5,000 a year, not very much. And she said, "Why, Dad? Can't you pay for this?" And I said, "Well, I could, but I want you to have some skin in the game." She said, "What does that mean?" I said, "Well, if you don't graduate, you're going to pay these loans off yourself." And she said, "Well, Dad, I'm going to graduate." I said, "I know, but I want to have you have a little skin in the game." And that's what a deductible is. I had a client call us one time after a storm, and they were disappointed in the amount that the insurance company had paid them after they filed their claim. And they said they were frustrated because they didn't understand what their policy was. And they said I had to pay way more out of pocket than I expected. And it turns out that they had a higher deductible than they realized. In fact, about 20 years ago, I had to replace my first roof. We had a storm come through our neighborhood. And it was me and three of my neighbors. After we had cut our grass and everything, we were just standing out there having some water and talking. And we said, a lot of roofing trucks in the neighborhood. I guess I got to replace my roof. And I asked the question, how exactly does that deductible work? And nobody knew. We were all smart guys, but we were all in our first homes, and we didn't know how it worked. And I said, "Is it one? I think that's 1%. What does that mean? Is that 1% of the cost of the roof, or is that 1% of what?" Somebody said, "I think it's 1% of the value of the house." And so we all were debating that and everything, and that's what it turned out to be. But I didn't understand that back then. And so most people, I think, especially first-time home buyers, may not understand how it works right now either. So here's how it works in real life. Let's say you have a $10,000 worth of damage to your home, okay, and you have a $2,500 deductible. The first $2,500 is on you. That's your skin in the game. After that, the insurance company pays the rest of it. So you would get $7,500 from the insurance company. You would pay out $25 on your own. Here's where the decision comes in. The higher your deductible, the lower your monthly payment will be. Okay, higher deductible, lower monthly payment. That's because you are putting more skin into the game. A lower deductible means a higher monthly payment. It's really just a math problem. There's no right answer here, but it's what you're comfortable being able to put out if something happens to you. How much you can afford in the event that you have an accident. And this is where I see people get surprised. They pick the higher deductible to save money, and it's because somebody didn't really explain it to them. Somebody just said, "Yeah, I can get you that price. Let me raise the deductibles." Or they just raised the deductibles and didn't tell you about that. I'm not saying it's right. I'm saying that's how it works in the real world sometimes. So if you don't know what your deductible is right now, or what it would mean in a real claim, it's worth it to check it right now. Call your agent, go through your deductibles, understand what it is, and ask, how much would it cost if I lowered or raised my deductible at this point in time? Because then it's easy to do the math. It's one of the simplest things to understand, and also one of the most important. Hope that helps. Have a great day.